This is the Rayliant SMDAM Japan Equity ETF, ticker symbol RAYJ. In this video, we'll discuss 1. What we believe makes Japanese stocks so compelling at this moment. 2. Why we think active management is so important for investing in Japan. 3. The partnership between Rayliant and Sumitomo Mitsui DS Asset Management. And 4. How the Rayliant SMDAM Japan Equity ETF portfolio is constructed. So what's so exciting about Japan right now? Well, it turns out that renewed investor interest in Japan has everything to do with growth, but we have to take the story back to the late 1980s when Japan underwent a massive asset price bubble. When that bubble burst, Japan's economy entered what you'll often hear referred to as Japan's lost decade of deflation and economic stagnation. But that was a period that actually dragged on for almost 3 decades. In fact, when we talk about Japan's market breaking out to new highs today, it's worth noting that the market last traded at these prices way back in 1989. So this new high watermark is actually a long time in the making. Now, if we come back to the present, what's got investors excited about Japan right now is that in the aftermath of the pandemic, and largely because of the Fed's aggressive tightening cycle, Japan's currency has gotten dramatically weaker. And as a result, its exports have started powering back, tourists are flocking to Japan, and all that's brought about significant inflation. In the US, we complain about inflation, but in Japan's economy, which has been suffering through 3 decades of deflation, rising prices are actually a good thing. With prices rising and growth making a comeback, investors are taking an interest in Japan's stock market is rising. We're encouraged not just by these macro developments, but we also like the fact that Japanese regulators have started chipping in on the policy front. They're trying to kickstart growth with corporate reforms that would encourage companies to operate more efficiently and to actually pursue growth. And the early indications are that those policies are actually working. We're also attracted to valuations that, even after the big capital gains last year, still look cheap relative to other developed markets. And because institutional investor ownership in Japanese stocks turns out to be especially low, that means good deals on fast-growing stocks can often go unnoticed in Japan. Finally, there's an impending policy change to rules around Japanese retirement accounts, and that makes us think that demand for domestic equities could be on the cusp of even more inflows, and we think that that could catalyze more gains in equities as those changes roll out. If you take all that together, we think it paints a compelling picture of a market that, even with recent strength, could still have plenty of room to run. After all, we're just barely back to where Japanese stocks traded in the 1980s, and it could be a market that's poised to make up for lost time. For an investor who decides it makes sense to add single country exposure to Japanese stocks, there's still an important choice to make, and that is passive or active. What are some of the key considerations there? For one thing, Japan's stock market's extremely large and it's highly liquid, but it's got one deficiency, which is relatively weak analyst coverage. Outside large cap stocks in Japan, there just aren't that many analysts following the average small cap name. In an environment like that, fundamental stock pickers could have an edge, especially in smaller, less widely covered growth stocks where we think that the research is even more important. That lack of institutional discipline is compounded in Japan by high levels of retail trading and big blocks of shares that are held by Japanese banks who aren't looking at those stocks as investments, and they aren't necessarily trading based on fundamentals. Behaviorally biased retail investors and the frictions that are brought on by financial firms' corporate cross-holdings create mispricings, and we think that active strategies are a great way of exploiting those opportunities. From a more macro perspective, with the return to growth that we discussed before, with the low valuations in Japanese shares, and with plenty of catalysts for revaluation of quality companies in Japan, for example, the corporate governance reforms that we just mentioned a minute ago, we think that Japan's a perfect market and that this is a perfect time for active investors to succeed. Next, I'd like to talk about the partnership between Rayliant and Sumitomo Mitsui DS Asset Management. One of the things that's most exciting about RAYJ is that the fund brings together 2 asset managers who are different, but also highly complementary in terms of their investment styles. Rayliant's an asset manager that specializes in systematic strategies. These are strategies that are engineered to exploit behavioral bias on the part of other investors, to earn extraordinary returns and to outperform a passive approach to accessing global stocks. Rayliant strategies use big data, machine learning, and that allows its investment approach to efficiently cover a massive set of global stocks. And the strategies take into account everything from company fundamentals to the behavior of firms' managers to the sentiment of other investors. Sumitomo Mitsui DS Asset Management is one of Japan's largest asset managers. They've got over 50 years experience doing fundamental research on Japan's market, and they've got a special focus on active equity management. The PM team at SMDAM has deep local knowledge of Japanese stocks, and they're supported by an army of equity analysts covering a wide array of Japanese companies. The Rayliant SMDAM Japan Equity ETF combines SMDAM's expertise in Japan's market with Rayliant's quantamental stock scoring. And we're confident that in launching this ETF, we're bringing US investors something that's really unique. In our view, it's an outstanding way of getting access to Japan's market in a convenient active ETF format. It's the first fund of its kind that offers this kind of quantamental Japan equity exposure to ETF investors in the US. Finally, we'll cover some of the differentiated aspects of the strategy's investment process and portfolio construction. The first thing worth noting is that given what we've described about Japan's return to growth, there are aspects of the ETF that we think make it perfect for getting exposure to a generational economic recovery in Japan. While the strategy is officially benchmarked to Japan's broad market topics index, the true target of the Rayliant SMDAM Japan Equity ETF is high-quality growth stocks in Japan. In particular, the fund's portfolio managers are looking for Japanese firms that have truly sustainable growth, companies that have managed to do something different, something better than others. Often these are the companies that pursue a product or a service in a market that prior to their coming on the scene didn't even exist. And that creates a winner-take-all business, and it typically leads to big profitability, and that's what the portfolio aims to capture. To find growth stocks that fit that description, the portfolio management team undertakes a top-down process of theme identification. And the idea here is to find medium to long-term trends that are likely to result in specific companies rising to the top of their industries. That kind of top-down analysis is coupled with deep dive fundamental research into individual stocks. That would include, for example, assessing how companies are positioned relative to competitors in their industries for themes that the PM team is tracking. It would also include evaluation of individual stocks according to Rayliant's quantamental scoring. The result of all this work is a high conviction portfolio of around 30 to 50 stocks. We're confident that an active approach based on quantamental insights, based on a local team with deep boots on the ground knowledge of Japan's economy and the companies in that economy, can give US investors an edge in accessing a market that, in our view, presents outstanding opportunities for growth and alpha. For more information about the Rayliant SMDAM Japan Equity ETF, ticker symbol RAYJ, visit our website where you'll find fact sheets, more description of the methodology, and other information that could help in the decision as to how you access Japan and why this ETF might be right for you. Thanks for watching. If you'd like more information on the Rayliant Quantamental ETF series, please visit funds.rayliant.com. Our team would love to hear from you. Send an email to info@rayliant.com, or you can dial 626-407-4581 to set up an appointment with a Rayliant representative.